Hey guys, Larry Hoffman here with LJH Investments. Just wanted to go over another note that I had accepted over. It's a performing note in Owasso, Michigan, and this is basically the Deal or Dud series that I'm starting back up. I did this years ago, and I'm just trying to get back into doing this and just trying to provide a little bit more value to you guys. Like I said, this is a performing note in Owasso, Michigan. Oh, let me move my mouse over here. And just to start off a little bit, the property details on this asset. It's a 3-bedroom, 1-bath home. It was built in 1890. It's about 2,500 square foot. It has a fair market value according to Zillow of 103,700. Always be very leery of those estimates. Um, it's fine when you're first doing your due diligence, right? When you're looking at these assets, and if you have a tentative offer, that's when you obviously always get a BPO. And I'll in the next slide you'll see what the actual value on this property came back at, and the Z estimates, the rental estimates on Zillow was 1,250, and then also on Rentometer, it's 1,250 as well. So looks like the market rents are pretty right on. The note details. This is a contract for deed. The BPO actually came back. Essentially, what happened was I made it an indicative offer, and he accepted it, and then I ordered the BPO, and then the BPO actually came back at 50, which I'm still fine because I'm under what I needed to be at in order to make my yield, my ROI that I'm looking to make on it. And plus, this is a performing note, and I'll get into it a little bit more. It's a first position, 15-year term, interest rate 10%. The principal and interest payment is $275. And what makes this note really great, in my opinion, is that there's only 82 payments left. So, 15 years, roughly what 6.8 years left, roughly 7 years left on this note. I mean, she's been paying like clockwork. And that's one of the things, right? You can't foresee what's going to happen in the future, but this borrower has a very good history of making payments on this property. So I felt it was a pretty good offer on this asset. The unpaid principal balance is 16,281. It gives you a loan to value of 33%. Which is pretty decent. You have a little bit of equity in there. And then my offer was actually a little bit lower, but ultimately I came in at $13,255. So the investment to value is 27%. So with just kind of going over the numbers, you think that the yield that I got on this is 17.09%, but you have to always factor in your due diligence. I have an attorney review the documents. I also have another company pull BPOs and title. So, when all that's all said and done, it's roughly costing me about $750. So you always have to factor in these costs, and a lot of people don't tell you that because you have to do your due diligence, and ultimately it comes down to the yield that you're looking to make on these assets. You also have to factor in your servicing costs. The servicing company that I'm going with, it's $15. I was going to say $1,500, $15 a month in servicing costs. You also have to factor in forced place insurance if the insurance wasn't on the asset, but the seller was able to provide me with proof of insurance. Taxes are current. So when you factor in all that, you actually think the yield was calculated out to be 15.09%, which it would have been, but I paid a brokerage fee on this of 1%, $132.55. So my actual yield is 14.74%, which is still phenomenal on this performing asset. And so, I think if I don't buy based off a percentage of UPB. I base my values on the internal rate of review, or I'm sorry, internal rate of return, the IRR, and the NP, the net present value. So that way, I'm able to look at this as a whole. And that's why this 14.74% is really a great return on my investment. So my exit plan on this guy is I'm just going to keep this. I purchased this in my self-directed IRA. It only has 82 payments left. So if things go as planned, you know, roughly about 7 years or sooner, if she comes into a windfall money, then they can pay it off, or if they refinance it, they can pay me off. You know, or just let it run its course. 6 years from now, it'll be paid off. But if something does happen where they do start getting behind on payments, then you know that's when you look at the at different strategies. My thing is doing a foreclosure is the very last thing that I want to do on anybody. I will do anything and everything to work it out to keep that borrower in that property. So you know, if something does happen, hopefully you know the borrower doesn't bury their head in the sand and just you know say that you know the heck with it, just go to foreclosure. But like I said, you know they have a very good history of pay on this, so you know I feel confident that this is going to actually go 6 years from now. It'll 7 years from now it'll be paid off. But you know this is investing. Things do happen. Situations do change. So hopefully, if they do, I'll be there to help them move forward with this. But that's it. Really, I just want to keep this in my self-directed IRA and just have the payments come in and have the servicing company service it. So with that, if you have any questions at all regarding this deal or any other deals that I talk about, please feel free to reach out to me. You can call me there on my cell, 513-301-1468. Shoot me an email, larry@lghinvestments.com. Schedule a 30-minute call with me, talkwithlarryhoffman.com, or go over to Twitter and you know just punch in that handle there, Lawrence J. Hoffman Jr. You'll see a lot of the other deals that I'm working on as well. Or if you'd like to visit my website, lghinvestments.com. There you can learn a little bit more about putting your self-directed IRAs to work. You know, a lot of people just have this money just sitting there and it's not doing anything. And then with inflation, you know, you really need to get that money to work. And then, you know, a lot of people also have bank CDs that they're earning a very low yield on it. And you can do so much better investing in these assets. So, and, you know, the really cool thing is with these assets, they're a tangible asset, and you know they're backed by real estate. Once again, a tangible asset. But in any event, if you just like to you know just have a conversation with me about these notes or just real estate in general, or just you know just to talk to me, just please feel free to reach out to me. And I hope you guys have a really great day, and hopefully I will talk to you guys later. Have a great day. Thank you.